The Sofi stock price target for next year has been a hot topic of discussion among investors and analysts. After extensive research and evaluation, industry experts have predicted an exciting outlook for Sofi Technologies. So, what is the projected price target? Let's find out. Afterward, we'll discuss the various price targets and predictions set by analysts for Sofi Technologies. Lastly, we will discuss Sofi's projected position in approximately 1 year to conclude the video. But before we proceed, make sure to hit that subscribe button and enable the notification bell, ensuring you never miss a valuable piece of knowledge. Without further ado, let us embark on an exploration of the stories that await us today. Today's Sofi stock news begins with an exciting development as the company receives a price target upgrade. The analysis provided by BTIG promises to be captivating and is something you would want to pay attention to. BTIG analysts have recently commenced coverage of two companies. Their discoveries are undeniably beautiful, starting with the ticker symbol Sofi. The analysts have assigned it a buy rating and set a price target of $14. In contrast, with the ticker AFRM, the firm Holdings has been given a sell rating, accompanied by a price prediction of $10. The market is undoubtedly responding to these new price targets, and it's shaping up to be a tale of two companies with a distinct trajectory. Let's direct our attention to Sofi stock as it takes center stage, stealing the show with its recent development. According to BTIG, Sofi is regarded as an absolute top pick within the consumer fintech sector. And why is that, you might wonder? The analysts are highly impressed by the company's comprehensive range of products and its user-friendly digital interface. Sofi's impressive product suite and seamless digital experience have garnered significant recognition from BTIG. The potential upside for Sofi is indeed remarkable to imagine. Additionally, when the student loan payment moratorium eventually concludes, it opens the door for even more exciting developments. With these sectors in mind, Sofi stock unquestionably becomes a company worth closely monitoring. Shifting our focus to Affirm Holdings, the company didn't receive the same enthusiasm from BTIG as Sofi. Affirm's business model is currently experiencing pressure due to the tightening of discretionary spending. Rising interest rates affect funding costs and the gain on sale premium, while variable and fixed expenses exceed revenue growth. In a competitive landscape where scale and profitability are paramount, BTIG analysts find it challenging to justify a firm's premium valuation compared to its peers. Now, returning to Sofi stock, it continues to shine brightly and captivate analysts with its robust platform, member-first approach, and promising potential for explosive growth. Meanwhile, Affirm Holdings faces challenges in a tightening market, with concerns surrounding its business model and valuation. It's essential to stay vigilant for further developments regarding these stocks, as the fintech industry is known for its constant surprises. With that said, let's dive into our next story and explore the exciting world of fintech. Sofi stock is undeniably making significant strides and generating a tremendous buzz among analysts. Some analysts are labeling it as a top pick within the realm of financial technology companies. Recently, Sofi shares experienced a remarkable surge, skyrocketing by an impressive 12%. Such notable performance is garnering attention and further fueling the company's excitement. The excitement surrounding Sofi stock is genuinely palpable, with a closing price of $9.16 and an extraordinary volume of traded shares. The market activity has been off the charts. But that's not all. The icing on the cake is its astounding 63% gain over the past 4 weeks. Such exceptional performance undoubtedly attracts investors like bees to honey as they eagerly seek to capitalize on this remarkable growth. The company is riding a wave of robust momentum, fueled by strong member growth, product innovation, and cross-selling efforts. Their remarkable operating efficiency and diverse product suite also contribute to their success. Sofi's ability to excel in these areas has significantly propelled its performance and solidified its position in the market. We understand the question that might be on your mind. Will this upward trajectory continue? While it is challenging to provide a definite answer, let me give you some insights. Analysts anticipate a quarterly loss of 7 cents per share for Sofi, which surprisingly reflects a remarkable year-over-year change of over 41%. These figures highlight an exciting aspect of the company's performance and indicate that despite the projected loss, there has been significant improvement compared to the previous year. Hold on to your hats indeed, as the projected revenues for Sofi are expected to reach a staggering $472 million. This jaw-dropping figure represents an incredible growth rate of 30.2% compared to the same quarter in the previous year. Indeed, while earnings and revenue growth are crucial indicators, monitoring trends in earnings estimates and revisions is also essential. Recent data reveals that the consensus EPS or earnings per share estimate for Sofi Technologies has undergone an 11.1% downward revision over the past 30 days. It's important to note that such revisions don't necessarily spell doom and gloom for the company, as estimates can fluctuate due to various factors and market dynamics. However, it's prudent to be mindful of these changes as they may signal shifts in analyst perceptions of the company's financial performance. The future ahead for Sofi is undeniably filled with excitement and potential. Currently, the stock holds a ZAX rank of 3, indicating a hold rating. However, it's essential to recognize that the future is uncertain, and changes in the company's performance and market dynamics can influence the outlook. Only time will reveal the actual trajectory and prospects for Sofi. But while it's impossible to make definitive predictions about a company and its stock price, we can engage in an informed analysis and discuss potential scenarios. Let's delve into the factors that may shape the future of Sofi, both in terms of its business prospects and stock price. Let's rewind and examine Sofi's journey since its initial public offering in June 2021. Like a growth stock, the company experienced impressive growth rates in revenue and customer acquisitions. However, due to its aggressive expansion efforts, it also faced some bottom-line losses. An exciting twist occurred when the economic climate became volatile, causing investors to exercise caution and gravitate towards safer stocks. This cautious sentiment had an impact on Sofi's supply, causing it to experience a decline in 2022. However, things have taken a remarkable turn in 2023, suggesting a potential shift in the company's trajectory. The market sentiment has improved, and investors again display renewed interest in growth stocks. In the past year, several growth stocks faced substantial sell-off as their high valuations were disconnected from their growth rates and financial losses. However, the tide is turning as investors recognize that Sofi's valuation was brought down to a too conservative level. This realization prompts a swift correction of the undervaluation, as investors now acknowledge the company's potential and show increased confidence in its prospects. Whether you believe it or not, Sofi's stock has already experienced a staggering surge of 104% this year alone. Can you sense the excitement in the air? However, here's the question: can this business sustain its massive gain? Well, my friends, we are about to find out. Let's dive deeper into the potential trajectory of Sofi's stock price and where it could be headed in the next year. Over a decade ago, Sofi embarked on a mission to provide student loans at more competitive interest rates. As its popularity grew, the company expanded its offerings to encompass a comprehensive range of financial services, including personal lending, investing, and travel services. Sofi's customer count has been steadily climbing, with nearly 5.7 million total customers and an impressive 443,000 new additions in the first quarter alone. This strong customer growth and robust revenue growth sets a good foundation for the company's prospects. Considering these factors, assessing the potential growth trajectory of Sofi's stock price in the coming year becomes increasingly intriguing. In the first quarter, Sofi experienced a remarkable surge in revenue with a staggering 43% increase compared to the previous year, reaching an impressive $472 million. This exceptional growth demonstrates the company's ability to capture a larger market share and capitalize on its diverse product offerings. It is worth highlighting that Sofi's management has also expressed optimistic expectations for the second quarter, anticipating a further year-over-year revenue growth rate of 32% to 35%. These projections indicate a continued positive momentum for the company and hint at its potential to deliver strong financial results soon. The significant revenue growth achieved in the first quarter and the optimistic outlook for the second quarter are indicators of Sofi's ability to execute its growth strategies effectively and capitalize on market opportunities. Sofi is indeed facing a temporary headwind due to the student loan payment moratorium, which has affected its revenue, given that this segment has been a significant driver of its business. However, the company has not allowed this challenge to hinder its performance. Expanding into new products has been a successful strategy in mitigating the moratorium's impact. As a result, business is thriving in other segments. Additionally, with the student loan moratorium scheduled to end in the summer, Sofi is poised to see a resurgence in revenue from this sector. While home loans experienced a hit due to the high interest rate environment, other segments such as personal loan origination have seen impressive growth, with a 20% increase compared to the previous year. Sofi's management has emphasized that they have robust risk assessment models in place, ensuring that the loans they provide, including those in the personal and home loan segments, are of high quality. The exciting part of Sofi's recent performance lies in substantial progress toward improving profitability. In the first quarter, the company made impressive strides in this area, with the net loss decreasing from $110 million to $34 million compared to the previous year. Furthermore, the adjusted EBITDA, or earnings before interest, taxes, depreciation, and amortization, experienced a meteoric rise, surging from $9 million to an impressive $76 million. This sharp improvement in adjusted EBITDA indicates the company's ability to generate operational efficiency and positive financial results. CFO Christopher Lapointe's prediction adds to the excitement, as he forecasts that Sofi could achieve net income positivity by the fourth quarter of 2023. Your prediction aligns closely with the optimistic outlook provided by CFO Christopher Lapointe. As you accurately foresaw, Sofi could achieve net income positivity by the end of 2023 or the beginning of 2024. So if you're looking for a potential investment with significant growth potential, Sofi stock should be on your radar. However, it's important to remember that investing in the stock market carries risks, and thorough research and due diligence are essential. Thanks for watching. Until next time.